Welcome back, learners, to our interesting course based on the theme Rudimentary Principles and Practices of Managerial Economics. I am Dr. Shantanu Saurabh, Assistant Professor, Department of Commerce, DAV PG College, Banaras Hindu University. So, in this module 9, lecture number 43, that is based on the theme Revenue Analysis and Theory of Profit. Till now, we have discussed about revenue analysis in the previous lectures, and today we'll be focusing on theory of profit. So in this lecture, we'll be basically covering these three important topics. The topics will be concept and definition of profit, features of profit, and types of profit. So one by one, we'll be taking all these three topics. So first topic, which is related to concept and definition of profit. As you must be aware that profit is the center point for any firm around which all the activities revolve. If the firm is not earning adequate profit, there are more chances that the firm will not be existing for a longer duration of time. So you can say profit is the most important thing for any firm, and in finance we say that profit and wealth are the two basic objectives for a firm to sustain and firm to grow. So today we'll be considering the concept and definition of profit. The word profit here may imply or denote different meanings for different individuals, which means the concept of profit varies from different persons or different individuals to individuals, which means from businessman point of view, accountants point of view, political leaders point of view, employees, economists, it varies in different sense. The concept of profit varies from these individuals to individuals. The profit for a firm simply means excess of total revenue over total cost incurred by the respective firm, which means the excess between TR and TC, the excess between TR and TC will be profit, the excess of revenue it generates. The excess of TR over TC will be the profit the firm is generating. In economics, the reward that an entrepreneur earns for bearing all kinds of risk and uncertainties is known as profit. This is a very important dimension to be understood in sense of profit, that an entrepreneur earns by bearing different kinds of risk and uncertainties involved in the market. In simple words, it is the residual amount which remains after distributing the respective rewards to all other factors of production, which means profit can be also termed as residual amount which remains after bearing the cost of all the factors of production. For land we need to pay the rent, for labor we need to pay the wages, and for capital we need to pay the interest. For after bearing all these expenses, whatever is left is the residual amount, is the profit for the firm. That is why reward made to all other factors of production are always positive, which means the reward being paid to all factors of production will be positive, but the reward made to entrepreneur in the form of profit can be positive, can be negative, or zero, which means the reward for different factors of production is always positive. You need to pay for them, but it is not a necessary condition that the firm will be generating profit. If the revenue is more than cost, it will be generating profit. That is a positive scenario, but if the cost is more than the revenue, it will generate negative sense or loss. And in the third condition, the total revenue can be equal to total cost, and in that case no profit, no loss will be generated. So this is a factor where it is not mandatory that the firm will be generating positive profit. There might be cases of loss also, or there can be case of zero profit or zero loss. Moving ahead, so in short we can say that profit is the remuneration paid to the entrepreneur for his effortless contribution involved in the process of production, which means profit is the remuneration which is paid to the entrepreneur for the hard work he is putting in the process of the production for the firm. So I hope this must be giving you an idea what basically is the concept of profit and how the concept of it changes from person or individual to individual. Now moving ahead to the definition of profit. According to Professor F.A. Walker, profit is the rent of the ability. In words of Professor Sukumputer, profit is the reward for the entrepreneur, or it is a payment of risk, uncertainties and innovations, which means profit is the reward for the entrepreneur whosoever is dealing, and it is a payment, respective payment for the risk he is bearing, uncertainties he is facing, as well as the innovations he is making in the firm. So in sense of Walker, it was rent for ability. In sense of Professor Sukumputer, it was reward for the risk and other factors the entrepreneur is bearing. And in the third one, in words of Peirce, profit is the difference between revenue generated from the sale of output and the full opportunity cost of factors of production of that output, which means the revenue the firm is generating by sale of output and the full opportunity cost of the factors being used in the production of that output. So in this slide we have talked about three opinions of Walker, Sukumputer and Peirce. Thus we can say that in simple words, profit is the reward for risk bearing entrepreneurs. Profit is reward for risk bearing entrepreneurs. As they are bearing the risk, they get reward in the form of profit. The amount of profit is always uncertain. You cannot predetermine that the firm will be generating this amount of profit in the coming financial year. It is always uncertain and full of risk and is dependent on numerous variables involved. So it is unpredictable and uncertain and can be positive, which means there can be profit, it can be zero profit, or it can be case of loss also for the firm. So the profit is a reward for the entrepreneurs and the amount of profit cannot be predetermined. The market is full of uncertainties. There can be good profit for the firm, there can be case of zero profit for the firm, or even there can be chance of no profit for the respective firm. Now we will be talking about the features of profit. As you are able to see on the screen, these are 6 important features of profit. There are other features also, but we have tried to consider these 6 important features of profit. The first one being reward for bearing risk. Second being profit is an end result of the business. Third is residual income, amount of profit, non-contractual income, and profit fluctuates. One by one we will be considering all these 6 points. Reward for bearing risk. Profit is the reward for contribution and efforts made by the entrepreneur in organizing, managing, controlling, budgeting and executing the process of production in such a way or manner that minimizes the wastage of the limited resources so as to generate maximum profit at given level of output by reducing the cost of production, which means that profit is the reward for the efforts being put in by the entrepreneur in doing different activities such as organizing, managing, controlling, budgeting and executing the production process in such a manner that wastage for the firm can be minimized, and if the wastage is minimized, the cost will be cut. Automatically a good amount of profit or a maximum profit will be generated by the respective firm. An entrepreneur, as you are aware, bears all these risks starting from the idea of business and its successful execution and implementation. So profit is the reward for these efforts made by the entrepreneur, which means, as you are aware, an entrepreneur is a person who is involved in the process of innovation. So right from the point the idea comes to that respective innovator, from that point to making that idea successful, there is involvement of different activities, and so profit is the reward for the risk and all the activities being performed by the entrepreneur. So to conclude, we can say profit is reward for bearing risk by the entrepreneur. Second point, it is residual income. As you are aware, the reward, wages, rent, interest paid to other factors of production are decided, or you can say pre-decided and determined in advance. For example, if you are using anyone's land, you need to fix the wages, rent or interest in advance before they actually involve in the production process. Therefore, the income earned by these factors is called contract income. Why? Because the reward for these factors are pre-decided for wages, rent or interest. That is why it is termed as contract income. But on the other hand, the reward paid to entrepreneur is not pre-decided and fixed in advance. Rather, they are paid after paying to all other factors for their contribution made in the production process, which means the entrepreneur is paid profit after all the payments for respective cost is being done by the firm. So the profit the entrepreneur receives is the last amount which is left. So it is right to say that profits are the residual incomes, which means the leftover part of income in the hand of entrepreneur after making payment to all the respective factors. And that is why profit is considered as a residual income. So in this slide we have talked about reward for bearing risk, and then we talked about residual income. Now moving to the third point, the amount of profit. The amount or quantum of profit cannot be determined in exact number because profit is uncertain and unpredictable, as it is influenced by number of internal as well as external factors that may or may not be controlled at all, which means the profit cannot be predetermined or predicted because profit is being influenced by numerous factors which might be internal or which might be external, and these factors might affect the profit or might not affect the profit. So predetermination or announcement of profit pre-hand is not possible. If everything goes well as per the plan being decided by the management, by the organization, the amount of profit will be comparatively high, which means every firm makes strategies or plans that the firm will be generating good amount of profit. So if everything goes well, there will be high or maximum profit being earned, and if the plan doesn't work effectively, the profit will be going down, which means if the numerous factors are affecting the firm, there might be cases that the firm will not be generating good amount of profit, or even it can incur losses for the firm. So that was about amount of profit. Fourth is non-contractual income. The reward paid to land, labor and capital in the form of rent, wages and interest are decided and known to them in advance, and that is why they are known as contractual income, which means the amount to be paid for land in the form of rent, the amount to be paid to labor in the form of wages, and the amount to be paid for the capital in the form of interest are pre-decided, and that is why it is termed as contractual income. But the reward paid to entrepreneurs are not pre-decided in advance, and that is why they are non-contractual income. Fifth point, the profit is the end result of business. Profit is realized by any business or any entity or any entrepreneur by the end of all business activities. The profit cannot be decided or ascertained before all the activities end up. The final profit can be calculated after the sales and making all the relevant expenses, which means the final profit, the end profit, can only be ascertained or calculated after the proper sale has been done and the payment for all the factors or all the cost has been made. So profit is realized by any business, any firm, after all the business activities finally get over. It cannot be pre-decided that the firm will be generating this amount of profit. Next is profit fluctuates or profit moves, which means profit is basically a residual income, as we have already discussed about it. So it cannot be kept fixed or constant. You cannot say that the firm will be generating, for example, say 10,000 crore rupees every financial year. It cannot be kept constant. It keeps on moving from financial year to financial year or quarter to quarter or different period of time. The profit can change according to the performance of the firm and other factors. It keeps on changing, as you are aware, from time to time due to dynamic conditions or factors and fluctuations such as depression in the market, boom in the market, change in demand and supply. Government policies might also affect the profit, innovation being done, customers' preference, taste, etc. in the economy, which means the profit always keeps on fluctuating. It cannot be constant, and there are numerous factors which affect the profit for the respective firm. So in this slide, we have talked about profit is the end result of business, and then we talked about profit, how it fluctuates. It cannot be constant. Now, we are moving to type of profit. As you are able to see, these are 6 types, basic types of profit. The first being gross profit, net profit, normal profit, abnormal profit, accounting profit, and economic profit. One by one, we'll be taking all these 6 types with you. Types of profit. Different economists have defined profit differently in their own perception, in their own understanding. Based on such different concepts and meanings, these are different types of profit which are explained as follows. The first, that is gross profit. As you are able to see on the screen, gross profit can be defined as the excess of total revenue over total cost, which means the excess of total revenue over total cost. Now, an important dimension to be understood here is that these costs include only explicit cost. This is the important thing, that in gross profit, in the sense of cost, only the explicit costs which are borne by the entrepreneur on hiring external factors of production. So here the gross profit is excess of total revenue over total cost, but in cost we consider only the explicit cost which are borne by the entrepreneur or the firm for bearing the external factor of production. The amount of gross profit is usually positive. So the formula for gross profit is that total revenue minus total explicit cost, and this explicit cost needs to be remembered. What is it? Which are borne, the costs which are borne by the entrepreneur for hiring external factors of production. So that was about the gross profit. Now we'll be talking about net profit. So net profit can be defined as the excess of total revenue over total cost, the same meaning, but here we include implicit cost as well as the explicit cost. This is the basic difference between gross profit and net profit. In net profit, in the cost, we include implicit cost as well as explicit cost, but in gross profit, we only consider the explicit cost. In other words, or in simple words, net profit is the profit earned by an entrepreneur for bearing the risk. As you are aware, net profit is the profit which the entrepreneur gets for bearing the risk, for being innovative and understanding the market and taking all the different kinds of pain. Net profit is also termed as economic profit, which you need to remember. Pure profit, it can be both either positive or negative. This is the important thing to be remembered. It can be either positive also, it can be negative also, but gross profit is mostly, you can say, positive. So the difference between gross profit and net profit is that the difference between TR and TC is profit. Now in gross profit, in cost, we only include the explicit cost, but in net profit we include both implicit as well as the explicit cost, and the gross profit is usually positive, but the net profit can be positive or negative depending upon the market conditions and performance of the firm. The formula, as you are able to see, for net profit is total revenue, the revenue the firm is generating, minus total cost we have discussed, that includes implicit cost as well as explicit cost. So here both kind of costs are being included. I hope you must be clear with the difference between gross profit and net profit. Now the normal profit. The normal profit can be defined or explained as the minimum amount of profit which is earned by an entrepreneur to survive in the industry, which means the minimum amount the firm requires to sustain or to exist in the competition for a longer duration of time. That is normal profit. It is the reward being earned by the entrepreneur for bearing certain risks which are already known to them. This is the important thing to be understood, that in normal profit it is the reward for bearing the risk which are already known to the entrepreneur. If the profit earned is less than the normal profit, then the firm would leave the industry. Now you need to understand this, that if the enterprise is earning less profit than the normal profit, it would not be able to sustain in the market for a longer duration of time. It will have to leave the market. Why? Because it will not be able to sustain for a longer period, as the minimum requirement is to generate normal profit for the firm. And if the profit is more than normal profit, then in such a case new firms would be ready to enter the industry, which means if the firm is generating profit more than the normal profit, there are chances that new players will be trying to enter the industry, because it is a favorable situation for the respective firm and other companies. Normal profit is always positive, which needs to be remembered. The next is abnormal profit. The abnormal profit is the amount of profit being earned by an entrepreneur over the normal profit, which means the amount of profit being earned by the entrepreneur over the normal profit is abnormal profit. It is the reward for bearing uncertain risk. As we have already discussed, the entrepreneur bears different kind of uncertain risk which are not known to the entrepreneur. This is an important thing to be understood, that the risk here is not known to the entrepreneur in the case of abnormal profit, but in the case of normal profit, here the certain risks which were already known to the entrepreneur. If an entrepreneur earns abnormal profit, then this is a symbol of efficiency and talent, which means if the firm is generating abnormal profit, it is an indication of proper efficiency, talent and proper functioning of the firm. The amount of abnormal profit can change as per fluctuations in the market, which means the amount of abnormal profit which the firm is generating can vary according to various factors or variables which affect the market. Abnormal profit can be both positive or negative. On the contrary, here normal profit is always positive. I hope you are able to understand the difference between normal profit and abnormal profit. Now, a very important thing, which is the accounting profit. As you are already aware, all the firms want to generate profit, but now we'll try to understand what is accounting profit, and then we'll be discussing what is the concept of economic profit. So accounting profit basically refers to the revenue earned by a business organization or any respective firm. It can also be defined as difference between total revenue and total expenditure of the respective firm during an accounting period, which is a very important dimension to be remembered, that here we consider a respective accounting period which includes overhead and production cost. This also you need to remember that it is considering an accounting period, as well as it includes overhead as well as production cost. The accounting profit is used to evaluate the firm's or organization financial health and compute its taxable income, which means the accounting profit is basically used for understanding the financial position of any respective firm and to understand how much tax the respective firm will be paying in the upcoming time. Now, the formula for accounting period is, as you are able to see on the screen, TR, that is total revenue minus, the R here stands for rent, W here stands for wages and salaries, I here stands for interest, and M here stands for cost of materials, which means accounting profit is total revenue minus rent, wages and salaries, interest and cost of materials, which means the payment you are doing for the factors of production. Accounting profit is total revenue minus direct cost, and net profit is accounting profit minus indirect cost, which you always need to remember that accounting profit here is total revenue minus factors of production, accounting profit is total revenue minus direct cost, and net profit is accounting profit minus indirect cost. I hope all the learners must have understood this. The last, that is the economic profit. The economic profit is the remaining amount of profit after deducting implicit as well as the explicit cost from the total revenue of the firm, which means economic profit is the amount which is left by deducting the implicit as well as explicit cost from the total amount of revenue being generated by the firm. Economic profit focuses on the total profitability of the firm while taking into consideration the mixed opportunities and the cost of next best alternative, which means the economic profit focuses on the total profitability being earned by the firm as well as the opportunities which have been mixed or opportunity cost and the cost of next best alternative. So, the formula here is economic profit is equal to total revenue minus explicit and implicit cost, which means total cost includes explicit as well as implicit cost. So, that is all for this presentation. In this presentation, we have covered these three important topics, that is concept and definition of profit, features of profit and types of profit. Then I made you understand the meaning of profit. It means it differs from individual to individual, and for generating profit the TR should be greater than TC. If the TC is more than TR, it will be negative sense. If the TR is equal to TC, there will be a situation of no profit and no loss. Then we discuss these definitions, and profit is the reward for the entrepreneur for bearing the uncertainties and unpredictable market. Then we talked of these 6 features: reward for bearing risk, profit is end result of business, residual income, amount of profit, non-contractual income, and profit fluctuates. We have discussed all these 6 points with you. Then finally, we talked about the different kinds of profit: gross profit, net profit, normal profit, abnormal profit, accounting profit, and economic profit. Here, as you are able to see, gross profit, total revenue minus explicit cost; in net profit, total revenue minus total cost, which includes implicit as well as explicit cost. Then we discussed normal profit. Normal profit is the minimum requirement for any firm to sustain in the market. Then we talked about the abnormal profit. Then we talked about accounting profit, that is for accounting period, which includes overhead and production cost. Then I discussed with you the formula for it. The accounting profit is total revenue minus direct cost, and net profit is equal to accounting profit minus indirect cost, which you need to always remember. Then we talked about economic profit, and the formula is total revenue minus explicit as well as implicit cost. So that's all, learners, for this session. In this session I tried to make an outline regarding all the different concepts of profit and its related functions. In the upcoming sessions we'll be talking more into this profit, and I hope these sessions will be of use for you. Thank you for patiently listening to our lecture. Hope to see you in the upcoming session. Thank you.